Hi everybody, in this video I am going to show you one of the most brutal market mispricings you can find today. Mr. Market is basically handing out free money. Let's get straight into it. Before we dive in, a quick disclaimer. Nothing in this video is financial advice. I own shares in the companies I am about to discuss, so I have a position in this. Do your own research and make your own decisions. Now, the company is Reysaş, specifically Reysaş Logistics, which is the holding company. They own 62% of Reysaş GEO, the REIT. And since Reysaş GEO is also a public company, the math is that simple. Layer 1, the holding discount. Reysaş GEO closed with a market cap of 61.28 billion liras. Take 62% of that and you get 38 billion liras. That is what Reysaş Logistics' stake in GEO alone is worth. Now, look at Reysaş Logistics' own market cap, 37.82 billion liras. So the market is pricing the entire holding company at less than just one asset inside it. Everything else, the logistics operations, the subsidiaries, the 7 billion liras in equity, the greenhouse operations in Denizli, you are getting all of that for free, literally free. And even on an enterprise value basis, Reysaş Logistics has net debt of only 3.67 billion liras versus Reysaş GEO's 3.39 billion. The gap holds. Now, let me put into perspective what free actually means here. The logistics operation you are getting for nothing is not some tiny side business. Reysaş is one of Turkey's largest automotive logistics operators. They have 350,000 square meters of vehicle storage area. That is a massive footprint. And they move 490,000 vehicles per year domestically. Think about that number. Nearly 500,000 cars and trucks a year flowing through their network. This is serious, industrial scale infrastructure. The kind of operation that takes decades to build and very hard to replicate. And the market is handing it to you for zero. But here is the thing. Even the asset you are getting for free through the holding discount is itself heavily undervalued. Which brings us to layer 2, Reysaş GEO's net asset value discount. Now, Reysaş GEO is a REIT, so by law, they get their assets independently valued every year. The latest valuations, done at the end of 2025, put the portfolio at 94 billion liras. That is $2.18 billion at respective rates. Strip out the net debt and you are still north of 90 billion liras in net asset value. The market cap is only 61 billion liras. That is a nearly 50% upside to the net asset value on hard, independently verified assets. We are not talking about speculative land plots here. These are prime warehouses rented to Toyota, Carrefour, IKEA, among others. Cash generating, contracted, real assets. So, Layer 1 gives you the logistics holding for free. Layer 2 tells you the asset you are supposedly paying for is itself trading at a heavy discount. You are getting a discount on a discount. Now, why does this opportunity exist? Two reasons. First, the logistics bottom line looks ugly right now. Almost 1 billion liras in financing costs wiped out what should have been a solid operating result, leaving only 27 million liras at the bottom line. The market sees that and moves on. But interest rates in Turkey are coming down and the company is raising 2 billion liras from shareholders, with 1.2 billion basically going straight to debt reduction. Less debt means less financing cost, which means the real earnings power of this business starts showing up. Once it does, the market will realize it basically gave away a logistics operation for free. Second reason this exists is Reysaş is notoriously bad at investor relations. No investor deck, no fancy annual report, but think about what that means. If they had those things, the opportunity likely would not exist. The lack of investor relations is part of why the mispricing is so persistent. And one day, that changes too. And I'm saying this while 80% of my portfolio is in Reysaş. So, the deeper you dig, the more you find. There are assets in the logistics books that are carried at acquisition cost, not fair value. There are greenhouse operations in Denizli that sit completely outside the REIT structure. There are land plots that Reysaş Logistics and the REIT jointly developed where the logistics site ownership is again outside what you see in GEO's books. The full picture is bigger than what the numbers show on the surface. And on top of all of that, Reysaş is a compounder. Look at what their project cost to build versus what they rent them for. The growth is not accidental. This is one of the most asymmetric setups I have ever seen. A holding company trading below the market value of a single asset it owns, where that asset itself trades at a heavy discount to independently verified net asset value, while the underlying business is about to see a meaningful improvement in its financials. All three layers resolving at once is a powerful thing. If you want to go deeper, I have a Reysaş collection on Patreon with the most comprehensive research available on this company, updated continuously as news and new financials come in. Reysaş is one of the three companies I cover on a regular basis alongside Tava Airports and CCI. And I also publish exploratory deep dives on companies I find compelling across different markets and industries such as Valaris, Noble, Alphamet, Tabgıda, among others. Everything is linked in the description. If you find this useful, a like helps a lot, and subscribing means you won't miss what comes next. Thank you again, and I'll see you in the next one. Bye.